Hello, I'm Matt Scooby. Welcome to Market Call. Today, Kim Bolton is on the show. He's president and portfolio manager at Black Swan Dexteritas, and we'll be taking your questions on technology stocks today. You can call us toll-free, 1-855-326-6266. You can also send us an email to marketcall@bnnbloomberg.ca. Kim Bolton is here with us. Great to have you with us today, Kim. And I think aptly timed for right now for what we're seeing in the markets too, right? We're seeing the big tech sell-off. The rise has been very great. I think a lot of people have been riding this. But give me your sense of where things stand here in the last little bit, particularly, maybe the last week or so, where we've seen the record highs, but now we're certainly starting to pull back from it.
Sort of the classic climb that wall of worry and then take the elevator down. Yeah, it's probably going to last a little bit longer. And see what happens on Friday with the SpaceX. There's so many moving parts, so much uncertainty out there. So people are rebalancing. I don't think it's going to have some legs in it. But it's a great opportunity for portfolio managers because, we can make money when the market goes up, but you can sort of distance yourself from the crowds by making money on the way down too. So we've got about a 52% hedge across most of our portfolios. We built up some cash to around 15%. So as we were saying on the research call this morning, where the rubber hits the road is going to be when we take our hedge off.
And the criticism has been, right, too high, too fast right now. And that, you mentioned it, that maybe this was coming a little bit, particularly for the AI stocks. And we talked about the technology sector in particular. Is that your sense of things right now? And you mentioned that we may not be done yet, but we're still seeing that, that mini correction still happening right across the board.
Well, that was a pretty dramatic fall yesterday because the futures got down to about 28,200. And it's sitting right now around 28,600. So, that 28,200 is going to be really important to find that support. If it goes through there, we're probably going down close to another 1,000 points. But, the market's always right, so you got to respect it. We built up a hedge by shorting some equity indexes and buying some puts. We sold some calls earlier, so we had some money for it. So it never plays out the way you think. You just got to listen to the market.
Right. I'm just paying attention, right?
Yeah.
And take it as it comes. Okay. Yeah. We're going to get into it here shortly, too. Okay. We're going to be back with Kim Bolton of Black Swan Dexteritas, taking your questions on technology stocks. Stay with us. You're watching Market Call here on BNN Bloomberg. We're going to go to the phone lines. Mike is in Toronto with a question for Kim. Go ahead, Mike.
Hi, I'd like to ask about Xanadu Technologies. I've been watching it since the IPO, and it was nice to see you recommend it last time, a Canadian name. Do you think it's going to be able to compete with the bigger tech companies? And do you still like it, or do you like anything else, like a BTQ or any of the others in the space?
Yeah, thanks, Mike. Appreciate that question, and certainly I think a good one too, right, Kim?
Thanks, Mike.
Where things are situated.
Well, yeah, I recommended it last time, so yes, we bought it. But we just bought a third, just see how it's trading. Currently, I think it's right around 18-ish or something.
Just under 17.
Just done. Yep. We'll probably look to buy it. Buy another third down around, just around 16.25, because we've got a 12-month price target of $60.15. So this is it's a fantastic company, really smart people, good at execution, and actually quite good at sort of messaging their business model. So they're a pure play Canadian photonic quantum computing company. Photonic is all about using lights and in the quantum space, you can be a lot quicker. One of the neat things about Xanadu is that they actually have that on the software side, they have that software stack called Penny Lane. It's an open source software stack, and it's used by quite a few people. They recently got into a collaboration with Oak Ridge National Laboratory down in the States, which is sort of a good housekeeping for them. You know, they introduced Aurora, the world's first modular network photonic quantum computer. And so, and they reported, when did they report? They reported back on the 14th, and everything, was fine. So, we're going to stick with it, and we'll probably buy some more down low 16s.
Okay. No, good to know that one. Let's go back to the phone lines, shall we? Michelle is in Vancouver with a question for us today. Go ahead, Michelle.
Hi, Matt. Can we get Kim's thoughts on Celestica? Do you still like and own this stock? Thank you.
Awesome. Thanks for that, Michelle. So Celestica, too. Talk about that, down today, but still up with a 500 mark, too. What are our thoughts, Kim?
This is one of the stocks that, Michelle, that we actually took some profit. We were talking at the beginning of the program, whether it was toppish when the markets in the technology space were toppish a couple of weeks ago, even last week. We could sort of feel it, and Celestica was a great example because we have a 12-month price target of $650, and we took the profit just last week. So we'll probably look at it here around sort of just under 500, add to it down at 475, and then down at around 450. But they're very much the darling of the Canadian networking companies. They provide design, manufacturing, supply chain solutions, and so on. They've done a lot of collaborations, especially with recently was with AMD, and they reported. I don't see the date, but the next earnings report is going to be coming up in the beginning of July. So, Michelle, I'd buy it here, just around 500, and then add to it down at 450 and 400. And
all the way down to 400. Because is the drop yet done? Because it's dropped off a little bit here too in the last couple of weeks.
It's hard to say. That last third, we rarely get. And if you do, you sort of wonder if something's wrong in the investment thesis that we're thinking. I think we'll probably get, I can see it stretching down to around 450, though.
Okay. Let's go back to the West Coast, too, where Michael also calling in with a question for Kim from Vancouver. Go ahead, Michael. Michael, can you hear us out there?
Oh, yeah, it's like a hockey puck here.
I don't think we have Michael here. So we're gonna stay in British Columbia too. Craig is in Kelowna with a question for Kim today. Go ahead, Craig. Craig, are you on the line there? Yeah, for sure. So Craig's question was about Applied Digital, Kim, and what our thoughts are about right now where Applied Digital stands.
We don't own it. We follow it definitely, but it's more of a trading stock rather than an investment stock. So at this stage, it's trading around just under 40. Based on the charts, you can see you could pick it up around sort of between 30 and 35, and let it go above 40.
Okay. Let's go back to, I want to just, we didn't lose Michael as well, but Microsoft was his question too a little bit earlier. So at least for right now and where things stand and given, the context of the last couple of days and this big tech sell-off, but where do you stand on Microsoft right now?
We own it. Currently trading just over 400. The average analyst actually out there has a 12-month price target of $560, so it's got a good runway. Rightly or wrongly, the market is always right, but because they're both a hardware and a software company, they get put in the penalty box because of the software side. But it's, them, Microsoft, Meta, IBM, they've all sort of gotten beaten down because they get painted with that software brush. But, they just have so many other positions, both on the consumer side, but also on the enterprise, and even into the government services. So it's definitely in our top 5.
Okay, no, good to know. We're going to continue taking some questions. We're going to be back with Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. Stay right here. You're watching Market Call. We're going to continue with our questions for Kim Bolton on technology stocks. We have an email from Reggie. Reggie emailing in to the program today to ask Kim, what's your opinion of Apple and where things stand? They got again fell a little bit yesterday, about 3% too, a day after the company revealed that artificial intelligence, AI software, at least for now. So what are your thoughts of where things stand right now?
Yeah, just sort of the announcement the other day with the WDCC it was just sort of like an anticlimax. I just hope that...
Not many surprises, right? Yeah.
Well, they have the new fellow in, Turnus, and he is very much a hardware guy. So it just felt like, and we watched the whole thing, it just felt like he was sort of cleaning house. And it wasn't very exciting. Mm-hmm. Siri... The upgrades in Siri with Gemini are very, very important. It is a bit rich. Well, it's $291. The average analyst out there has a 12-month price target of $316. So the runway isn't all that great. What we've been doing, we own it, is every time it gets up sort of around that $300 level, we've been selling sort of 1 and 2 week calls just to earn some income, some premiums. Yeah, we still like it.
Still like it? And still like buying right now at this level or maybe waiting for it to come down a little bit?
Well, if you don't own it, yes. Mm-hmm. And then, you can gradually move into it. So you can buy it here, buy it down at around, maybe around 285 to 280. I don't think you'll see it go much under 275.
Okay. We're going to go back to the phone lines now, too. Todd is in Niagara Falls. So the question, go ahead, Todd.
Hey there. Thanks for taking my call, Kim.
Yeah.
My question is on ServiceNow. Maybe your opinion on it, or if you would stick to somewhere else, and maybe just the AI play long-term versus short-term. Thank you so much.
Thanks, Todd. Appreciate that. Sneaking a couple in there. Let's start with ServiceNow, too, and and your thoughts on that first, Kim.
Well, once again, it's a software stock, mm-hmm. and it's tough. It's tough being a software company, and you'll see that actually in our past picks. It's interesting. I'll give a little bit of sort of background. The whole, as we've always talked in the AI stack, on the foundation, you have the infrastructure together with all the networking stocks, a lot of hardware. The second layer, the middle layer, is the software. And actually, a year ago, we actually picked a number of software stocks because they are the ones that we're going to optimize the hardware so that the end users would actually be able to use the hardware and optimize it. Mm-hmm. And it made a lot of sense. What we really found out, really starting at about this time, certainly going into the fall of last year, is that the inference software companies out there, like the Anthropics and the OpenAI and the Perplexities, they were going to be the chosen ones for that software AI stack. And then the rest of them, it's not as though their product suites are becoming antiquated. They just haven't been quick enough to actually get in. So, for example, ServiceNow, we owned it. We got rid of it last sort of spring. We tried to find some other ones, even getting specifically for certain industries. So like we picked like a Spotify. Perfect. A massive company, 800 million subscribers. But likewise, it didn't work out. I think these software stocks will come back when they actually start to incorporate that inference AI into their business. But, you know, the Anthropics and the OpenAIs and the Perplexities, they have a nice little moat around it right now. That I think that moat will disappear once they go public, though.
Right, and that's the thing, too. We just heard about OpenAI, just, quietly trying to, moving forwards and towards that. Other part of Todd's question was short-term, long-term AI. Hard to gauge, it feels like right now, but any thoughts on either of those two, at least for right now, on where you would get into? Are we talking about staying in OpenAI and staying with Anthropic, at least for now?
Well, they're private. Anthropic is supposed to be going public in July.
Apparently, yeah.
OpenAI, interestingly, the CEO said the other day, just like you were saying, Matt, once you become public, there are a lot of things you can't do that you could do when you were private.
Yeah.
So everyone wants to monetize what they spent the last decade or so doing, but you got to be tempered. So saying all that, I think it's sort of dangerous getting into these heavily subscribed inference AI IPOs that are going to be coming up. You'll have lots of opportunity later.
Yeah, it feels like it's going to get very cluttered here very, very quickly, too, in the markets.
Yeah.
Let's go back to the phone lines, shall we, too? Sangeet is in Toronto with a question for him. Go ahead, Sangeet.
Hi. Would you get into Intuit software right now? Would you buy it at this price level? And we talk about the business itself. Thank you.
Thanks, Sangeet, for the question, too. Another software one where we've been touching on this, Kim, and where things stand right now. But I think I can guess maybe what you're going to say, but give us your thoughts, because you're looking at the board right now, too, down below that 290 mark right now, down almost 3% today.
Matt, it's crazy because there are a lot of analysts that follow these software companies. And they did really, really well for themselves, from about 2010 to 2025. But then the pendulum swung. I don't think it's actually going to swing back toward the software very soon. But actually, Sanjeet, what you might want to do with Intuit, like they reported just a couple of weeks ago, and it was miserable. We didn't own it, but the analysts, this is where I was going, the analysts still have a 12-month price target on Intuit of $490.
Wow.
And here it is at, my gosh, $200 shy of that. So it's a great runway. It's sort of enticing, but it's just not the place to be.
Yeah, it feels, it's nerve-wracking, right?
Yeah.
To be in there at that point.
On the other side of the coin, look at Constellation Software. It was only a month ago that Constellation Software was down at 2,400, and now it's up almost at 3,000. So there are some bargains. Sanjeet, what I would recommend is if you really have a hankering to get involved in Intuit and you believe in the story and the investment thesis, I'd actually sell some puts. Sell some puts with a strike price that you really, really want to own it at, rather than just sort of buy it at the market.
Yeah, certainly fair. We're going to take another quick break. When we come back, we're going to have a look at Kim's past picks. Stay with us. That's next. Well, time now for past picks, and Kim was just alluding to it too, and some of the hits that he has taken here in the last little bit. Not necessarily, I think, getting into this space, and it's not always going to be rainbows and unicorns and everything is good with the markets, but Spotify is our first past pick with Kim. Down 30%, he's to look at a lot of the red, but take us through, in the last 12 months, Kim, where you've ended up here with Spotify.
Actually, I was going to say, for the listeners, maybe you want to go and get your sandwich or beverage for this segment.
No, Don't be around.
So we recommended it, as I said, about this time last year.
Mm-hmm. June 18th last year.
Because we really felt that going into the end of 2025, well, and certainly into 2026, that hardware foundation for the AI stack was going to mature. And we felt the next layer had to be the software that would enable the end users, the enterprise applications, to actually use AI computing power. And so we searched around. We own ServiceNow, we own Salesforce, and then we picked up Spotify, looking for, it's a fantastic company. It's a $105 billion market cap company. It's got 800 million subscribers that are actually paying, and they've really sort of cornered it together with Apple Music. But it's so. We bought it when we came out with the top pick last June 18th. I was looking today. It was sort of in that sort of mid-September to mid-October of last year that we realized that the headwinds of the Anthropics and the OpenAIs were just going to be too strong for these guys, and they were going to attract all the attention. In the meantime, Spotify is $500. It's got a $605 12-month price target.
Mm-hmm. Yeah. So, okay, interesting. Let's go to another one too. A little bit of red too on the board. Roblox is our last pass pick as well. Lost over 50%, actually close to 60% here in the last. But again, you just talk about headwinds at different points, different challenges facing this one.
So with Roblox, I was looking at it. We actually lost about 10% because we got rid of it at the beginning of October of 2025. It's, when you read about Roblox, it makes so much sense because it's a video game developer that actually caters a lot to the younger generation, and it really opens up people's eyes and how to use the whole 3D digital worlds. But then you have the inference AI people that came along. So we lost a little bit of money on Roblox. We made some money actually on Spotify. Roblox right now, $42, 12-month price target is $65.
Okay.
But I wouldn't touch it.
But we're leaving. I was going to say, but we're leaving it alone right now, based on this conversation today. The other one is Adobe too, Kim. Here in the last year, so not quite the losses, but still, as we've been touching on software and where things have been at, it has not necessarily done well last 12 months.
But it was a very good learning exercise. We always have sort of a rule of thumb: if we have a position and it goes south by 15%, we got to revisit the whole investment thesis. So we actually made some money on Adobe. Thank goodness we didn't hold it because it really got hammered. You can see it sort of spiked up recently, but then the CEO quit. And like if the CEO loses faith, what do you got? But it's still, it's a $105 billion company. The last thing I'll say about it, and actually for Adobe, the average analyst out there has a 12-month price target of $327. So it's got a decent runway. I would imagine sometime in the second half of 26, 2020, the first half of 2027, I would imagine a lot of these hardware companies whose stocks have done extremely, extremely well will be very enticed to actually look at some of these software companies to sort of broaden out. And it seems to be the flavor out there that if you're a hardware, you do want to have some software because that pendulum will swing.
It's going to go back. It always does go back, right, at some point.
Yeah.
So, okay, we're going to be back with Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. Stay with us. You're watching Market Call here on BNN Bloomberg. We're going to go back to the phone lines, too, for some more questions on technology stocks. Bill is in Bowmanville, Ontario. Go ahead, Bill.
Thank you for taking my call. I'd like your guest thoughts on Veritiv Holdings and what do they see for the future for this company. Thank you.
Thanks for the question, Bill. Kim?
Thanks, Bill. Yeah, interesting company. So they're American provider of infrastructure and services, catering to data centers, communication networks, commercial and industrial. One of the things that they're known for is power management, thermal management. They have these integrated rack systems. They acquired recently Bimarco structures and thermal keys, so they're very much on the move. You know, it's a big company. It's a $155 billion company. Currently trading, right around that 280. The average analyst out there, and we're sort of similar, has a 12-month price target of $377. So it's got a good runway there, Bill. So I'd buy it here, perhaps down at around 270, add to it, and maybe at about 260.
Okay. Oh, good recommendation. Let's go another caller to John is in Scarborough, Ontario with a question for Kim. Go ahead, John.
Yes, good afternoon, gentlemen. Mr. Bolton, I'd just like your opinion on a company called Flex, ticker FLEX. And I wanted to know if there's any comparison between this company and Celestica. I used to own Celestica. I sold it and I bought Flex. And that was about a year ago when it wasn't doing very well. And suddenly it's taken off. Anyway, your opinion, please, would be appreciated. Thank you very much.
Yeah, John just on the chart, too, saw that big spike in the last few months as well. So John timed that one well. But what do we think?
Well, the main reason it spiked is because it got included in the S&P 500. What was the other one that was included? Oh, tip my tongue. So if you own it, I'd actually be writing some calls against it up here because it's had a really, really good run.
Yeah.
Earn some income. You can always, if you want to keep it, John, you can always sort of roll the strike price up. But when it sort of got into this nosebleed area, it's time to write some calls.
Bruce is in Simcoe with a call for us again too as well. Bruce, go ahead.
Thank you. And my question would be on Snowflake, and I see so many analysts recommending it, but it doesn't seem to take off too much.
Yep. That's it. It was Flex and Snowflake that got into the S&P 500
right at the same time.
So, Bruce, thanks very much for the call, because that was the name I was thinking of, and that's why it popped. It's a really interesting company because it's a software company that sits within data centers and cloud networks. And it just, enables organizations to consolidate data into a single source. It actually allows other applications to work better together. So currently trading just under 244, but the runway's a little bit short. And so the average price target is up at 292, the average 12-month price target. So the next earnings is not going to be for a while. The next earnings isn't until August 26th. So, up at this stage, yeah, I'd be sort of the same as in Flex. I'd be sort of selling some calls, and if you don't want to get called away, just roll the strike price up.
And for now, do you prefer one of those two, or they're both in very similar positions, though?
We own Snowflake in a number of our separately managed accounts, and I can feel your angst, Bruce, because when you read about it and you listen to them, and they have a new CEO, he's done really, really well with it. It makes so much sense, but then again, it gets brushed with that software, even though it's not a consumer software, it's an enterprise software in the cloud, and so it doesn't have it has a nice moat around it. Doesn't have a heck of a lot of competition. I always compare Snowflake to Datadog, who also, but it's far outperformed that of Snowflake until recently when Snowflake popped because it got into the S&P 500.
Let's have another email too now before we're going to go to another commercial break. But this one comes in from Lauren. Lauren says, "Hi Kim, could I please get your outlook on Arista Networks too, on ticker ANET? Your thoughts too on Arista, Kim?"
Yep. So where are we? We're sitting right around that one, sort of 152.5. 12-month price target is 182.5. So there's not. There's about a 20% lift from here, but I'd still buy it in tranches. So, buy it here, and then look to add to it, sort of down around that 147.5, and then down at 140. I don't think you'll probably see the 140. Arista actually came out of Cisco, and that's why they do what they do. And one of the reasons that they've done better than Cisco is because they didn't have all the legacy hardware products that Cisco had before. And so where they really made a lot of hay was into the Ethernet, the networking equipment for Ethernet. They really carved that out for the data centers and so on. So we own it. And we've got a pretty full position right now. I know once it sort of gets up toward that, 165, which was pretty recently, that's where we were selling some calls.
Okay, good to know. We're going to be back with Kim Bolton of Black Swan Dexteritas, taking your questions on technology stocks here on Market Call today. Let's go back to the phone lines here as we're talking about technology stocks with Kim Bolton. Katie is calling in from Simcoe. Go ahead, Katie.
Oh, hi. Thank you for taking my call. I'm just wondering if I should still hang on to XLK, or should I get something like Lam Research?
Okay, thanks for the question too, Katie. In case you missed that too, again, we're talking about SPD or the EFT too as well, and where she stands.
XLT.
And XLT, sorry, on that one. So go ahead, Kim.
And then the second part of her question was about a specific stock.
Lam Research.
Right. Okay. Interesting. We were just chatting about it. I was reading an article yesterday. Now, technology vendors actually account for 55% of the market cap of the S&P. And actually, those top 10 account for 40%. So it's really front-loaded. I went through the dot-com period, and that was one of the ingredients that we had back then. But the other thing, the XLT is good, but it's sort of like a mutual fund. I don't want to harm anyone, but it's good when the market goes up. But to be perfectly honest, you need a technology hedge fund manager that can actually protect, your unrealized gains when the market starts to crater like it is right now. So on the other side, on the other side of the coin, I remember Warren Buffett was once asked, his wife asked him, so if you pass away, Warren, where should I put all my money? And he said, put it in the S&P.
Very simple.
Yeah,
right?
very simple. But, these markets, as you've seen, and it probably has a lot to do with the Trump regime and so on, there's a lot of volatility. So there are opportunities when the market goes up, but there are also a lot of opportunities in the options world, in the derivatives world, when the market goes down.
Yep. So again, there's always going to be them. They're always going to be there, certainly.
Yeah.
Let's go to another caller. Ray is in Ottawa with a question for Kim this afternoon. Go ahead, Ray.
Good afternoon, gentlemen. I bought Shopify several times over the past years and done well with it. Lately, it seems to be on a downtrend. Is it time to bail out?
It's a good question, too, Ray. Thank you, and appreciate you calling in for us right now. Been one of the darlings, too, clearly, for the Canadian tech sector. But your thoughts, Kim?
So right now, it's trading...
Just below 153 there.
And I've got the U.S. version here. So I just have to do the foreign exchange. So it'll be another 30. So on the Canadian, it would have a 12-month, the average 12-month price target would be $190 to $195. So there's still some runway left in it. Again, and especially because it caters to small, medium-sized, and some large-sized businesses, and also to consumers, it gets that software brush on it again. But it's still a $200 billion company, and very proud Canadian all-star out there. So I would buy it here. We don't own it. Pardon me. We actually own it in a few of our separately managed accounts. So buy it here, maybe down, second tranche down around 105 and the third tranche down around 100. What that really sort of tells me is that it's getting near the bottom.
And for Ray to hold on right now?
Yes.
Yeah, right? Okay.
Yep. And Ray, I'd buy, I'd add to it if it got down certainly toward 100.
Okay, good to know. We're going to take another quick break. When we come back, we're going to have a look at Kim's new top picks. Stay with us for that. Join us tomorrow on Market Call. Stan Wong will be on the show. He is portfolio manager at Scotia Wealth Management. He'll be taking your questions on North American large caps and ETFs. And if you missed Market Call, you can check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Well, time now for top picks with Kim. This time around, we're going to start with ARM Holdings today too. Kim, certainly interesting semiconductors, but also, you talk about the dreaded software a little bit in here, right, for architects. But take us through ARM Holdings and why you like it right now.
So this is the one that SoftBank. Remember, they owned it. They actually took it public, but I think they're still the largest shareholder in this. So it's a British semiconductor software design company, develops and licenses all the way from GPUs to CPUs to field GPUs. and they especially design, but they have been getting into it's still a fabless, but they're talking about getting into the fabrication side. Where they've really carved out a nice niche is in making it, their chips very, especially their CPUs, very power efficient. And so you'll find them everywhere when it comes to the smartphones and tablets and so on. And so they just carved it out very nice. They have a good reach around the world. Currently trading at around 343, I believe. It's got a nice runway, a 12-month price target of 447. So yeah, we really like this, and we've been adding to it. So you can buy it here around that 343. Next stop would be down at 325, and then down at 305.
Okay. Next up is IBM, which just reached a 6-month high for the stock at the start of this month too. But take us through why you like IBM right now.
I know it sort of sounds a bit boring, doesn't it? However, you know, they've when they spun off all their supercomputer side, and then they ended up with sort of the hardware and the software, and they're big into the AI. They're huge into the quantum. So they check all the boxes. The last earnings was a bit of a execution slip up. That was back on the 22nd of April. But they, so, you know, we have a full position right now, about 4.5%. So buy it here, add to it. Next third would be down around 270, and then down at 255.
Okay. The other one too for top picks today is Tesla too. Has had a very volatile week, I think, you know, back and forth, and at least for right now. But why do we like Tesla today?
When we started talking about it last couple of weeks ago, but as being a top pick, it was, you know, it was up around 410 to 414, and now it's sort of come all the way down to this 385. So we liked it up there, but we love it down here. I think there's, you know, a lot of the SpaceX is influencing it, and, but we've learned you buy Tesla sort of anywhere between 350 and 375, and you let it go up at around 4.25, 450. The average analyst out there actually has a 405 price target. Ours is a little bit higher. But it's just it has so many horses in the race. Mm-hmm. Yes, it's got the EV, but an even bigger business than the electric vehicles are the batteries. It's actually overtaken it in revenue. And then later this year, I think the batteries are actually going to be overtaken by the Optimus, the robotic side. It's a really interesting business model, unique, and it works for them, for Tesla, because it's all vertically integrated. Instead of, you know, getting involved in these supply chains around and relying on other people, right?
Which is interesting.
Yeah.
Yeah. So certainly going to be interesting. We're out of time, but we've got to go for today. But Kim, appreciate you being here. Thanks so much.
Nice working with you, Matt.
Great, you too. Yeah. Thanks for watching Market Call. We're going to be back with you tomorrow. We'll see you then.